Okay, Webster, what we're going to do then is I want you to break down what's happening with the 1,000-point plunge, with the financial terrorism, the trillion, and now they want more than a trillion, and it's just getting worse by the minute. We will cover all of that on the other side and what this is leading to. Is this the beginning of the giant worldwide financial meltdown that Webster's talked about for more than a decade? Stay with us.
Way up north, to Alaska, way up north, to Alaska, north to Alaska, go north for precious home.
Okay, Webster, I got so many questions. What's happening with Angela Merkel, Nicolas Sarkozy, Gordon Brown stepping down? 150 billion goes to a trillion, the 1,000-point drop, just a whole nother crisis out of the middle of nowhere, but not for our listeners. You've been for several years saying it would start in Europe and Greece. Webster, break it down.
Well, maybe we should start with the 1,000-point drop, since that was the dramatic thing last Thursday afternoon between about 2:30 and 3 o'clock. That wiped out, in theory at least, in terms of paper wealth, 1 trillion of paper wealth wiped out in about 10 or 15 minutes. And then, of course, they rushed back in with the plunge protection team, the PPT, the President's Working Group on Financial Markets. And by massive buying of futures in Chicago, they were able to updraft the New York market so that it came back. But now, over these days, we're getting an idea of what happened. So let me just set the stage. By Thursday of last week, there was already a panic that was building up. And the panic comes out of the fact that a group of hedge funds, a group of hedge fund hyenas, led by Soros, led by Greenlight Capital, led by Brigade Capital, led by Paulson and Company, but with Goldman Sachs, Bank of America, Merrill Lynch, and others also taking part. All of this written up in the Wall Street Journal. Nothing secret about it. They had decided to attack the bond market of Greece, Portugal, Spain, Italy as a way to find a weak flank to get at the euro. And the goal of that, of course, was to save the world predominance of the dollar by driving the euro down. The only way you could make the dollar look good is to make the euro look very bad. So they began that last December after Dubai went bankrupt out there in the Persian Gulf. So with this, they had generated then a systemic crisis, as it's been admitted to have been over the weekend. So by Thursday, we were on the brink. We were going into a systemic crisis, and the market was already down about 350 points, which is, I guess, quite substantial these days. Now, you got to remember in the background that about 2/3, 3/4 of all trades don't go through the New York Stock Exchange anymore. They go through electronic platforms, and that most of the volume, probably 3/4 or 4/5 of that, of the stocks that are traded by high-frequency traders who are actually hedge funds acting for their own account. So you've got high-frequency trading. These are thousands of transactions per second with no human input. The humans find out what happened later on. They're programmed computers. You've got flash trading, a variation on that, and then you've got program trading in general. So the news that I think is coming out now after the investigation, according to the Wall Street Journal of today, you have a hedge fund called Universa Investments of Santa Monica, California. And Universa Investments, again, it's a hedge fund. It's one of these deregulated operations that flies below the radar of the Securities and Exchange Commission. Nobody knows what they do most of the time. Now we find out an example. $6 billion under management. And the interesting thing about this is that this is associated with a famous theoretician. This guy's name is Nassim Taleb. And he's a theoretician of being a hedge fund hyena, which he is. And he's the author of this book called The Black Swan, The Impact of the Highly Improbable, which he wrote then in the wake of the panic in 2008. So the story now is that around 2 o'clock in the afternoon, a little bit later than that, this Universa Investments buys 50,000 stock options, derivatives, in Chicago on the Chicago Board Options Exchange. And these 50,000 stock option derivatives contracts are a bet saying that if the S&P 500, one of the leading stock indices, if the Standard & Poor's 500 falls from the current level of 1145 when they made the contract to 800, then Universa Investments gets $4 billion. Quite a nice piece of change. And this contract was bought by Barclays Capital, the representative of a British bank, actually one of the British banks that helped to drive Lehman Brothers into bankruptcy back in 2008. So Universal Investments successfully does this transaction. So if the S&P 500 crashes, they get $4 billion. Now, the market continues to fall. At this point, Barclays Bank realizes, oh, my God, it's falling. If it reaches 800, we'll have to pay Universa $4 billion right away. So what the Barclays people then start doing is hedging. In other words, they start selling other things so that they're covered against the fall. And this then builds up into a snowball and a cascade. And within 10 or 20 minutes, you've got more panic, a couple of high-frequency traders drop out, and then you've got your market plunge.
All right, stay there. Then we'll look at what's happening in Europe and what comes next. Webster Tarpley's our guest. Key information straight ahead.
We're on the march. The empire's on the run. Alex Jones and the GCN Radio Network.